Hi, Martin. Thank you so much for coming to BizTalk. How are you today?
Good. Hi, Massimiliano. Thanks for having me. Great to talking to you.
My pleasure. Thank you so much for coming and sharing your experience, knowledge, and your venture with us. Before talking about Monkee, shall we give an introduction to yourself?
Yeah, sure. So I'm Martin. I'm one of three founders of Monkee. Previously to Monkee, I've been working for 15 years in the premium consumer goods industry. There, I've been working in several different senior management positions. And after 15 years, together with my friend, I decided to start a project that it's now called Monkee.
Let's talk about Monkee.
Yeah, sure. So what's Monkee all about? We started Monkee with the vision to help millions of people achieve their goals without having to build up debt. So we see ourselves a little bit as the antithesis to buy now, pay later and consumer credit. So Monkee helps people basically to save up for what is important to them, and at the same time actively contributes money to their saving goals while they buy the things they need to buy at one of our partners. And so how does this work? Our users, they sign up for Monkee. They a bank account with our banking partner gets opened in the background. They then connect their existing bank account with Monkee. And then they can start saving basically by 2 clicks. We have a lot of different saving rules and saving challenges, which are actively triggered by transactions on their reference account. So we're using PSD2 open banking connections here, and we use nudging. So that's basically push notifications. Hey, Massimiliano, what about saving 12 euros for your vacation? And then you press yes, and the 12 euros get saved. And in the background, an algorithm starts learning when and how we need to send you those notifications in order to increase chances for helping you achieving your savings goals. And then we have a feature which we call a future boost. It's technically a cashback feature. So we have partners, and whenever you buy the things you need at one of our partners, you are getting money as contributions in your savings wallets. And we have 2 buckets of partners. One bucket is directly linked to the savings goals, so like vacation or electronics products or sports equipment. And the other bucket of partners is in a category we call daily necessities. So groceries, pharmacy products, all the way to clothes. And whenever you buy your groceries at our partner, you're getting money for your rainy day fund or your vacation or for the laptop of your kid.
Oh, that's great. This has been a very nice pitch. I like when pitches are so concise and very straightforward. And I do like it. I do believe founders must be capable to tell all the story in 60 seconds. So you've been very close by. Thank you. Let me ask you, how do you set up my saving goals? Based on what?
Yeah, so many of our users, they come already with having some saving goals in their mind. So, for example, some of the favorite goals is for a vacation or for electronic product like a new smartphone or a laptop, or in the area of sports equipment, an e-bike or a skiers. So they come into the app, and then we have something we call the goals wizard. So the app also already helps them to define goals for them with just a few clicks. At the same time, we also nudge our users and let them know what other users who are similar to them are saving for at the moment, because there's a difference if we tell them they should save for this or that compared to if we let them know that people who are similar like them are saving for this and that. And this way we can also nudge them to save, for example, for sinking funds like the insurance premium, which needs to be paid every January, for example. So we nudge them also to save for buckets that make sense for them in order to keep them financially healthy.
But in terms of saving, what exactly your application does? Tell me how much and tell me how to save, or which products to buy to save?
No, saving with regards to putting money aside for what is important for you. So this means that you can just go into the app and click with 2 clicks, you save 5 euros for your next vacation. Or you can set up saving rules. For example, whenever you shop something online, or whenever you fuel your car, 5%, 10% of the amount that you spend there gets saved for whatever is important to you. Or we are using those nudges, for example, which is push notifications, which try to get you save money for what is important to you. A few years here, a few years there, and at the end of the month, this cumulates to quite significant amounts, which people very often have never thought about that they may afford that. So this way we are using gamification and nudging and behavioral design to help people put money aside for what is important to them. And as mentioned with the Future Boost feature, we let their savings grow while they consciously buy what they need to buy at one of our more than 450 retail partners.
When you reward with the 10%, I mean, this money are coming from the partners themselves.
Yes. So technically, it works like a cashback system. So, for example, if you're saving money for a vacation, at one point in time, we let you know that we have, I don't know, Booking.com as a partner. If you then click via the app at Booking.com, you jump to the webpage of Booking.com, and then you just book your vacation. And then technically, we receive money from Booking.com, kind of affiliate commission, because we brought them a new customer. And part of the money that we receive from our partners, we put back to our users as a contribution to their other saving goals. And on average, our users, they save around 10% annually on, or they let their savings grow around 10% annually on top of what they're saving.
So you're sharing with the users your payback.
Exactly.
Where are you today? I mean, in terms of market, which is the market you are targeting today?
Yeah, so we launched our product in Germany and Austria, and we now already have more than 200,000 users, and we help them to save money for saving goals with a total value of more than 220 million euros. And as mentioned, we already have 450 retail partners where our users can get those Future Boost / cashbacks when they buy the things they need to buy.
I mean, the cashback I find very clever, but that's my curiosity. I tried to save money. I mean, talk about when I was younger, not today, because my money, they all get invested, so I don't save anything. But before, I tried many times to save, and all the time I've been back to get the money I was saving. I used the money one day. So how do you stimulate them and to tell them, don't touch this money, please, trust me, keep this money for you. One day you will need it.
I mean, it really depends a little bit on what our users are saving for, because there's different saving goals. So there is, of course, this rainy day fund, which is money to keep for emergency. But a huge amount of the saving goals of users, they are concrete consumption goals. So they're saving money for their vacation, or they're saving money for the laptop, the school laptop for their kid, or they're saving money for a new e-bike they want to buy next year. So our users, they very often save money for goals they want to for things they want to buy in the future. And in this way, it makes sense that they're taking out the money at one point in time. And what we are aiming to do is really, we want to establish this save now, buy later, how we call it, as a responsible alternative to buy now, pay later. So instead of you have a desire, you want to buy something, and instead of buying it using credit because you don't have the money now, we help our users to save a few weeks or months, and then buy the things they want to buy, but with the money that they have in their hands, without and not using debt for doing that.
I mean, buy now, pay later, which can be useful. I mean, I'm not saying it is not, but I think many that do not understand that is debt.
Yeah, you're right. Yeah.
Someone doesn't. But
there's also already studies that buy now, pay later, it's triggering unsustainable consumption. So many users, they're buying things they can't afford to buy. And we saw over the last 24 months during COVID that those business models, I mean, they have been quite successful. At the same, I mean, we also have to say that there hasn't been interest rates. Why? So you're getting credit. You didn't know it is credit because you didn't have to pay interest on that. But now the situation changed, and now this credit has a price tag on it. And many companies, they also have to increase their fees because they see that those business models, they are difficult now in this new economic situation. And
many new, let's call venture concepts, they start with a very little knowledge on the business model. It's try to save, or what I call, and Buy now, pay later, it's a bit lacking business model. It's like when started WeWork. Okay, so we are not reinventing the wheel. So it's pretty clear that the model behind must be structured more. And I agree with you. They do not disclose what they must. And whoever is going to use this money, they should know that there's a debt. They are receiving credit and not just installments to pay what they need. Let me, in terms of KPIs, what's your market fit today?
What's our market fit today?
Your market fit. I mean, do you have any key performance indicator that you can share with us?
I mean, as mentioned, we are using kind of active users. We are using how much money gets saved, and we are using the let's say the how the future boost is used. And over the last 12 months, we now reached double-digit millions in total transaction value. So that's the amount that has been spent via our platform. We are growing still double-digit with still quite little marketing spend. So I have to say that a huge amount of our customer acquisition is still organic. So we are doing quite a lot content marketing on several different channels, a lot in blogs and so in other blogs, and of course boosted now with paid acquisition.
In terms of business model, how do you charge your?
So our app is for free. Our app is for free for the end user. We are basically charging our retail partners. So as mentioned, whenever someone is buying something via our platform, we are getting a commission. That's one large part of how we monetize our platform. The second platform is that retail partners, they can buy placement packages in order to get visibility at very relevant potential consumers. So for example, if you are a travel company, you can buy visibility at users who at this moment save money for their next vacation. And you can be visible in the app, you can be visible in newsletters that get sent to this cohort of users who are saving money for their vacation. So in this way, our retail partners, they get visibility at highly attractive consumers, leading to 10x higher conversion rate compared to other type of affiliate kind of setups. And so that's a second way of how we monetize. And the third way is that we launched the Smart Money Payment Card, which is it's a Visa debit where our users now can also get future boosts, not just in e-commerce, like in traditional cashback apps, but also in stationary retail. And we are getting a transaction fee for every card usage, interchange fee.
I like it. That's a very workable, what I call business model. Let's talk a bit more about the funding round. How much are you raising now?
So at the moment we are at a kind of seed plus Series A round with a ticket size of 4 million euros. And with this money, we are going to invest that into 3 different areas. So the one area, of course, is user growth. The other area is retailer growth, so onboarding new relevant retailers. And the third area is in building out our data capabilities, because at the end, our USB is in matching what consumers saving for and want to spend money on, and at the same time matching them with retailers who fit to their needs. So building out all those capabilities to see what are users spending their money on, where they and then match that with retailers and their deals in order to increase the individualization and for example, so that we don't, like other cashback apps, need to send you very spammy emails with deals that you're not really interested in, but really send you only offers and partners where we know that they are relevant for you based on the data that we can see from your savings and purchasing behavior.
How big is this market and how do you scale it?
Yeah, so we in order to get an understanding of our market, we use two numbers. The one number is cashback is part of the digital advertising market, which is a 170 billion euros market in Europe alone. The cashback market in Germany is 10 billion euros in size. So that's one thing. And then we also think that we are an alternative to some buy now, pay later use cases. I don't say that we are in competition with that, because at the end there is kind of somehow different target group, but the buy now, pay later market is also expected to be around 170 billion in Europe. So we see ourselves kind of in those two markets, of course, with a big focus on the digital advertising / cashback market.
Thank you. Let me close with some more topics related to you personally, right?
Yeah.
What's your motivation to start your venture?
Yeah, I mean, I've been working for 15 years in the corporate world, there in several different senior management positions. And one of my last positions was being responsible for the global innovations management at a large global premium consumer goods company. And there I already had the chance to start to work a lot with external startups, but also with internal ventures and startups. And one of the projects was in the area of mental and physical well-being. So it was about capturing data and helping people to improve their habits in those areas. And there I had the chance to dig very deep into the topic of gamification, nudging, behavioral design. And but over this time in this corporate world, I learned that driving innovation in large organizations, 30,000 employees plus, is super difficult. So we had the challenge that we had some really amazing projects, but compared to the existing traditional business, they have been still quite small. So it was difficult to get buy-in and difficult to really drive them. And after some time together with a friend, we decided that there are projects which we are so confident in that we would even put our own money into them. But we didn't understand that companies are not doing that. And then we decided that maybe it's about time after 15 years to work on our own projects. And this, how we came up with, after some conversations, with the idea of developing kind of a financial well-being coach, which is now called Monkee.
And how do you get this startup idea? Coming from where?
Yeah, I mean, as mentioned, so I've been digging into those topics of nudging, gamification, and I always had a private passion for personal finance. So my whole life, I've been living a financially very healthy life. But I learned with a lot of conversations with other colleagues around me in France that there's a huge issue, people dealing with money in the right way. And this is where I also saw that when talking about nudging, there's usually three use cases: health, wealth, and happiness, because those things are quite similar. So it's all about balancing instant and delayed gratification. It's about overcoming this knowing doing gap. So we all know that we should do more sports or should eat healthier food, but the problem is not about the knowing but the doing. And this is where we thought, okay, maybe let's develop an app that helps people to overcome this knowing doing gap in the financial area and helping them to achieve their financial goals, whatever it is. And after having conversations, we learned that there is really a big need in more short to medium term financial goals. So because there's a lot of tools which help you to save money for your retirement, but there's still many people who are going into debt because they want to book a vacation but don't have the money for that. And this is where we came up with the idea for Monkee and then started working on that.
We always talk about the positive, okay? So we talk about startups, as we always talk. It seems that everything is great, but we know perfectly that founder life is tough. Yeah. Starting and taking off a business from scratch, it's one of the most, probably for me, absolutely one of the first three toughest things in your life. What issue occurred so far? How did you overcome them, if you had any? And I'm confident you had.
Yeah, I mean, you're absolutely right. It is tough. It's really an emotional roller coaster, right? and yes, I mean, like in every startup, there have been different challenges and they are different in different stages, right? Of course, at the very beginning, it was that Christian, my co-founder, and I, we had this idea, but we are both no software developers ourselves. So we first had to build a team that is capable in realizing what we had in mind. And this was already the first challenge, because we know that in the tech area, it is super important to have a CTO as a founder in the team and not outsource everything. So we started looking for a CTO, which of course took us 6 months or so, because you are only having the idea, you're not having a lot of money to pay someone a good salary. This person needs to have a lot of trust in you and your concept. And I mean, what we always could do is talking and pitching our idea with several people. And at every opportunity, we have been talking about what we plan to do. And there was this coincidence that a friend of a friend somehow heard about that and was immediately interested about that. And this person became our CTO, the third founder in the team. And this is how it started. And then, of course, we started building the product, and we realized that in order to do what we want to do, we need to have banking partners. And yes, it's not easy calling up banks and talking with them about APIs and how we can connect with their infrastructure. Of course, I mean, we had a lot of conversations, and then we came up with, then we learned about banking as a service, which was a concept which was quite new for us, because we are quite outside. We have been outsiders of the financial industry, and we learned that there is banks which are, kind of renting out their banking infrastructure to guys like us. And then we could build our product, and then customer acquisition. So I think the challenges, they are different in different phases. And I think at the moment it's really about balancing growth, burn rate, and all those things. I mean, knowing that the venture capital market quite significantly changed over the last few months.
Martin, thank you so much for coming to BizTalk.
Thanks to you, Massimiliano.
I'm very
pleasure.
pleased. Thank you so much.
Bye.